Hello, everyone, and welcome to this WTR Symposium series. You're tuning into the first podcast installment of Critical Elements Mining and Processing Infrastructure Buildout, a matter of national security. As a reminder, this is part one in a two-part series. I'm your host, Shawn Severson, founding partner and CEO of Water Tower Research. My co-host today is Dmitry Silversteyn, Senior Chemicals and Materials Technology Analyst here at Water Tower Research. We have a great group of senior management for our event today, so let's get started. Dmitry, could you kick things off and take us through today's company lineup?
Absolutely, Shawn. For the first edition of our WTR Critical Elements Symposium on the importance of developing robust domestic infrastructure and capabilities in critical metals and materials, we're discussing current projects and initiatives by Western-based companies to ensure critical elements availability that is not reliant on China and other less than friendly jurisdictions, or those who give little more than lip service to environmental and human rights considerations. We will speak with senior management of the metals company, Westwater Resources, Avalon Advanced Materials, Northern Graphite, and Odyssey Marine Exploration. Also, be sure to tune into our part two of the symposium, as Shawn mentioned, where we will continue these conversations with companies involved in efforts to establish China-independent production and processing capabilities in supply chain for critical elements. These companies are at the forefront of developing critical elements resources in North America, Europe, and friendly Asian and Pacific Island nations, along with the processing and refining infrastructure needed to secure true material independence from China, and doing so with minimal impact on local and government and global environment and disruption to indigenous communities. Starting from the metals company, ticker TMC, Craig Shesky, Chief Financial Officer, is joining us. TMC is a pioneer in deep sea mining, who is in the process of commercializing a polymetallic nodule resource in the Clarion-Clipperton zone of the Pacific Ocean. These potato-sized nodules would contain high concentrations of nickel, cobalt, copper, and manganese, metals essential for modern economy and technology. From Westwater Resources, ticker WWR, we have Terence Cryan, the company's executive chairman. Westwater Resources is developing a domestic graphite processing plant and flake graphite mine in Alabama that can help support the domestic graphite materials needs for battery anode materials going into EVs and other lithium batteries. From Avalon Advanced Materials, ticker AVL, we are pleased to welcome Scott Monteith, Chief Executive Officer, and Lauren Crenshaw, Chief Financial Officer. Avalon Advanced Materials is developing a rare earth elements and zirconium resource in Canada and is also looking to build a lithium hydroxide processing plant in Ontario, as well as continue working on a number of other metal and mineral projects in North America. From Northern Graphite, ticker NGC, we welcome Hugh Jackeman, Chief Executive Officer of the company. Northern Graphite is a natural graphite company developing graphite resources in Canada and working to establish North American and European-based plants to upgrade flake graphite material into battery anode materials. From Odyssey Marine Exploration, ticker OMEX, we have Mark Gordon, Chief Executive Officer. Odyssey Marine Exploration is a deep sea exploration company that develops subsea mineral deposits, including phosphate deposit off the coast of Mexico and a polymetallic nodule resource off the coast of Cook Islands. As a reminder, our content on Water Tower Research is entirely open access and can be found at our website, www.watertowerresearch.com. For those with access, investors can also find our content on research aggregators such as FactSet and Bloomberg. With that, Shawn, let's get started.
Hello and welcome everyone to this WTR Symposium series. You're tuning in to the Critical Elements Mining and Processing Infrastructure Buildout, a matter of national security podcast. I'm your host, Shawn Severson, co-founder and CEO of Water Tower Research. My co-host today is Dmitry Silversteyn, Senior Chemicals and Materials Technology Analyst here at Water Tower Research. I have a great group of senior management for our event today, so let's get started. Our first guest is Craig Shesky, Chief Financial Officer of the metals company, which trades on the NASDAQ under the ticker TMC and is a pioneer in deep sea mining, who in the process of commercializing polymetallic nodule resources in the Clarion Clipperton Zone in the Pacific Ocean. There's a mouthful there. Craig, please tell your audience a little bit about your background and what TMC is trying to accomplish with respect to the development of offshore mining and subsequent processing of the critical elements. And obviously, this is something the world needs to continue down the path of technological development. So, critical and key topic for discussion.
Absolutely. Pleasure to be here, Shawn. Dmitry, always good to see you. Starting with my background, well, I'm based in New York. I've been here for nearly 20 years. I spent the previous 12 years at King Street Capital, roughly $20 billion AUM hedge fund here in New York. I covered a lot of different situations in long, short equity and credit, also covered metals and mining. Before that, I was at Morgan Stanley for 2 years. And I actually grew up in an area of the US where metals and mining is dear to everybody's hearts. In fact, my dad worked in the iron mines for Cleveland Cliffs for about 45 years. I worked in those mines in college to pay for college. And it's really an interesting time politically because you're seeing a risk, and I think some recognition from this administration, that we might be trading energy independence for mineral dependence. When you're talking about the production of some of these critical metals, such as nickel and copper and cobalt and manganese, the processing and refining is dominated by China. And also the investment in the upstream mine site also often comes from Chinese funded investments. So there's a control, a really single point of failure supply issue coming for a lot of these key metals. Now, credit the US government for seeing this problem coming, a problem that China has been really orchestrating for many decades. And now the US is trying to catch up and do something about it. What TMC is doing is the collection of polymetallic nodules that sit on top of the seafloor in the Clarion-Clipperton Zone, the Pacific Ocean. So while yes, I have a mining background and we're talking about metals and mining today, to collect these nodules, you don't require any digging or blasting or drilling. These nodules sit unattached on top of the seafloor. So it's really like vacuuming up a two-dimensional resource as opposed to the traditional method of mining that is much more invasive, but also, frankly, much more costly. Importantly, where we are today, we hit a major milestone where we, after 15 years of work, have put out the first ever pre-feasibility study for a nodule collection project. And that included over 15 million tons of reserves, the first time you've ever had reserves for a metal resource in international waters. So suffice it to say, TMC has taken this idea from conceptual to reality, building upon a lot of work that many pioneering companies in the United States did in the 1970s, including Lockheed Martin and US Steel. The technology to collect these nodules off the seafloor has been around for a very long time. But the one thing that wasn't around was a clear regulatory path to allow permitting. And while the United Nations, they've set up something known as the International Seabed Authority in 1994 to govern resources in international waters for any countries that submit to ISA jurisdiction. The US never submitted to ISA jurisdiction for international waters specifically because of their objections to giving up rights that the US would have to seafloor resources and deep sea mining. Instead, the US put in place in the 1980s their own seabed mining code that actually predates the existence of the ISA. And that seabed mining code is what we have applied to be the first operator to launch into commercial production, which we expect towards the end of 2027. So we believe it's commercially viable. It's low cost, both on an operating expense and capital expense basis relative to land-based resources. And the one thing I haven't mentioned yet is the value. Our pre-feasibility study and the initial assessment for the rest of our contract areas shows a net present value today of $23.6 billion across our contract areas, with some upside beyond that. So we're still trading at a tiny fraction of the fundamental value of this resource, which is the single largest source on the planet of battery metals for infrastructure, defense, manufacturing, and energy.
Thank you, Craig. This is Dmitry. So welcome to the program and glad to see you as well. Let me follow up on what you just said about the polymetallic nodules. You're looking at nickel, you're looking at cobalt, copper, and manganese, if I remember correctly, in the nodule specific to the CCZ zone that you're exploring and developing. You mentioned the Chinese domination of processing, but obviously these metals are mined in a variety of jurisdictions. So what's wrong with the way that the industry is organized currently? Why would the world need almost 200 billion ton resource to come online in the undersea arena.
Yeah, well, it's a question of geology. We have been mining these metals for hundreds or thousands of years in each metal's case. Copper, of course, has been around for a very long time, and nickel, has been a focus for several hundreds of years. What used to be called the devil's copper. The nickel market right now is dominated by Indonesia. Roughly 60% of supply is coming from Indonesia, and nearly 100% of the expected growth for land-based nickel is coming from Indonesia. There have been some sad stories, of course, in the last few days with some turmoil in Indonesia and protests. And look, that's not unique to Indonesia. Many countries are going through that, but it's not tenable to have effectively a single point of failure for sourcing some of these metals, which are all on the U.S. Geological Survey critical minerals list. So out of nickel, manganese, copper, and cobalt, every one of them is deemed critical by the U.S. government. And for nickel, manganese, and cobalt, the US currently produces zero or close to zero primary production of any of these metals. So what happens when you need these metals for aerospace, defense, infrastructure? What happens when China might decide, you know what, we're not going to allow the export of these minerals either from China itself or from Chinese funded investment in places like Indonesia. So that creates a difficulty. Manganese is mainly sourced from areas in South Africa, Gabon, Ghana. Cobalt is nearly all coming from the DRC. And there have, of course, been some issues with artisanal mining, child labor in that jurisdiction. Copper, of course, is very critical, and a lot of it comes from Chile and Peru. But the nickel story is the one that really jumps out as a untenable geopolitical situation on a metal that the US cares deeply about. So when you look at other transactions in the space, public-private partnerships, for example, like what MP Materials successfully executed earlier this year with the Defense Department, it is a situation that's brewing in our metals as well, as they are all critical for aerospace and defense. So TMC is able to offer something to the US government that can solve their criticality issues for 4 metals in one fell swoop.
That's very interesting. It's interesting you mentioned MP Materials. I think also Department of Defense, I think it was to put out basically a solicitation for a contract to buy 7,500 metric tons of cobalt. And that's going to be a challenge even over a 5-year time span, given how little of it is outside of Chinese control. And in that authorization, there were very specific guide rails set on where that cobalt would come from. So that 7,500 metric tons is a drop in the bucket compared to what Chinese are building up in their warehouses. But even that would be tough to raise for material that has not touched China at some point in its processing.
You're absolutely right, Dmitry. And one of the things that I think people should be aware of when it comes to solving the issue, a lot of people will look to permit reform. A lot of people will look to making things easier for miners to get started. That's great. And this should not be a either or solution. It should be all of the above. But it typically takes anywhere from 16 to 20 years to go from discovery to production for a nickel or copper mine. So none of these moves are going to move the needle in the short term. And I think a lot of people who are used to resource investing might think, on the energy side, for example, the capital cycle is much quicker. Here for metals and mining, China's been planning to dominate for decades, and credit to them, they've done exactly that. So to find the sources necessary to wean the United States off of imports for some of these critical metals, you have to go to sources that we already know about that are already commercially viable. And our polymetallic nodules fit that bill. These have SEC compliant resource statements, pre-feasibility study that's been signed off by 9 qualified persons, the majority of which are independent, all saying, yes, the resources are there, it's high grade. And as we show in the PFS, it's in the lowest quartile of the cost curve. Many new projects necessarily would be entering the market at the high end of the cost curve, which makes sense. If it was economic to build them out, it would have happened decades ago. So you need a period of rising prices to justify it. Well, what happens when in some of these markets, China is intentionally keeping prices low by overproducing and, frankly, not cared about their own cost of capital? That is the situation that we've seen over and over and over again. And the only way you can really break that impasse is to A, provide, government support for projects, which, personally, I don't view as somebody who believes in free markets. I don't think that's the long-term solution, but maybe some of that is required. But the best solution is to go after projects that are viable now with resources that are very big and high grade. And that's exactly what this resource represents, being developed by TMC.
Understood. Understood. Thank you for that overview. And then maybe before we leave, I want to ask you one more question. And you alluded that in your earlier answers. Mining is one thing, but processing it is another. And even if you mine in DRC or in Indonesia, or if you're getting lithium out of the Andes or Australia, at the end of the day, it ends up in China for processing. So processing infrastructure, refining and upgrading these metals to materials that are usable by the downstream customers, whether it's batteries, excuse me, whether it's magnets or super alloys. What does it take, and how long do you think, in your opinion, would it take to set up sufficient infrastructure domestically, or at least on friendly shores and with friendly nations? And what are some of the obstacles to getting that accomplished that you mentioned that go beyond regulations?
I would say the main obstacles are time and political will. So the time to set up these facilities is not insignificant. The good news is when we're deploying, for example, the flow sheet that would allow us to take intermediate material from these polymetallic nodules and refine that into, let's say, sulfate material that could go into batteries, or copper cathode that could go into myriad uses. The technology to do that and the flow sheet to do that has been proven out. The hydrometallurgical flow sheet that we've developed has been replicated many times before. There's no new breakthrough. Same thing on the processing side. We can process these nodules using a rotary kiln electric arc furnace flow sheet, pyrometallurgical flow sheet that has been done many times before. And we, along with our partner Pacific Metals in Japan, have proven. And Dmitry, you and I were there in April when we got to see what that facility looked like, and it was quite impressive. So really, it's not anything that requires a magical solution. It just requires time to build it out. And are we able to bring a domestic processing and refining solution to the US that can survive multiple administrations? Are people going to be worried that if there's a different administration down the road, perhaps the political will won't be there? I think we have to start thinking, as the US economy, start thinking in decades rather than quarter by quarter, because that's certainly why China's been able to build out that lead. So I think the political will is now there. I think this is no longer a left versus right issue. This is a recognition, as you're seeing, Putin and Xi and Kim Jong-un walking together hand in hand. There is a new political reality that shows the U.S. And the U.S. adversaries are willing to work together on their solutions, and the U.S. has to think long term as well. What you can't magically find is a resource itself that can be processed and can be refined economically. And that's one thing that TMC has in spades. So I think we'll get there, but it's going to take a lot of time. It's going to take a lot of political appetite.
Thank you, Craig. Shawn, I'll turn the call over to you.
Great. Thank you. Thank you for joining us today, Craig. Great overview. And we'll look forward to having you back. And thank you, everyone, for participating.
My pleasure.
Our next guest is Terrence Cryan, Executive Chairman of Westwater Resources, which trades on the NYSE American Exchange under the ticker WWR. They are actually developing a domestic graphite processing plant and flake graphite mine in Alabama. I'm going to ask the first question, then turn it over to Dmitry for additional ones. But Terrence, please tell our audience a little bit more about your background and what WWR is trying to accomplish with respect to the development of a domestic source of battery-grade graphite materials and eventually a domestic natural graphite mine.
Great. Well, happy to be with you, and thanks for having me. I'm Terrence Cryan, Executive Chairman of Westwater Resources, and prior to becoming Executive Chairman, I was the CEO. My background is starting in finance, first 20 years of my career on Wall Street and investment banking, and then transitioning to private equity. And then for the last more than 15 years as an operating CEO. And I've had the privilege to lead both publicly traded and PE-backed companies as CEO. So Westwater is near and dear to my heart. We have been on a mission to be the leading American graphite anode producer for lithium-ion batteries for the last 8 years. And so we're making real progress. We think we've got first mover advantage, and we're looking to continue to build on that momentum.
Great. Thank you for that introduction, Terrence. Can you provide our audience with a little bit of an overview on the graphite market? And there's natural graphite, there's synthetic graphite. So I know it's hard to get the market size, but can you talk about the structure and sort of what the current business environment is in terms of fundamental demand drivers, or maybe some of the headwinds that the market may be experiencing?
So graphite is a critical mineral and has been designated as such by each of the last two administrations. And it's important because it's 50% of a lithium-ion battery. And whether that's your laptop, your phone, your EV for battery storage, the anode in a lithium-ion battery is made up of graphite. And it's typically a blend of natural and synthetic. Between the two. Natural has certain advantages over synthetic in terms of conductivity. It also has certain advantages from an environmental standpoint versus synthetic. But most major battery manufacturers blend the two, and we anticipate that that will continue. What's interesting about graphite relative to other critical minerals is that, whether it's Benchmark or Argus or Fast Markets, all three of them agree that of all the critical minerals, the critical mineral with the most significant supply-demand imbalance is graphite. So we're pretty excited about being in that place. And, we made an important decision about 4 years ago that we were going to put the development of our graphite processing plant in Kellyton, Alabama, ahead of the development of our Coosa graphite deposit. And that is a little different than the way, it typically gets done, where the mine gets developed first and the processing plant follows. And the reason we did that really was twofold. One, we knew that the processing plant was going to be a lot easier to permit, and we're halfway built and we're fully permitted. We also knew that was a faster path to revenue and cash flow. And the third element is, we know in the United States that, permitting any kind of extractive project, particularly a mine, is a long process. And so we didn't want to put our business plan at risk of the vagaries of the permitting process. And so, we feel really good about, where we are in terms of having that first mover advantage in terms of our processing capability. And that's really where we think the real bottleneck from a shortage standpoint is going to be. Not on the graphite concentrating, say, level, really on the anode material level.
That's a perfect segue into my next question, Terrence, and I'm glad you touched on that, because getting material out of the ground is one thing, but if you look at the current market structure, wherever you end up mining critical materials for batteries, whether it's graphite, whether it's lithium or cobalt, it all gets shipped to China for processing, because there's just no processing plants, or not enough processing plants in areas close to the mines and outside of Chinese control. So can you talk about the importance of establishing a domestic, or at least a non-Chinese or Indonesian or Democratic Republic of the Congo based processing ecosystem for critical metals?
Right. So today, 93% of all battery grade graphite comes from China. And of the other 7%, a pretty significant portion of that is plants owned by China in other parts of the world. And so from a US or a North American perspective, we currently don't produce any battery grade graphite. And that's something that I think everyone should be concerned about from a national security perspective. And so, we are now 2+ years into construction of our Kellyton plant. We are more than 50% of the way along in terms of capital for that plant. And we see ourselves as being, the first American company to have graphite, battery grade graphite, anode material processing capability. And that's one of the big reasons why we're 100% sold out under offtake contracts for our phase 1, and even partially sold out for our planned phase 2.
Wow, that's very good to hear. You mentioned that it's easier to get through the permitting regime in the US for a plant, a processing plant, as opposed to a mine. But when you look at sort of the obstacles to establishing the domestic supply chain, what are some of the things that you see that are being, real impediments, or maybe top two or three impediments to getting both the processing infrastructure and eventually, in your case, the mining infrastructure built out?
Right. So in addition to not having any um, graphite anode processing capability in North America, there's only one small operating graphite mine in Quebec, Canada, which is used primarily for industrial purposes. And so developing that capability is going to be an important aspect as well. At Westwater, we control the Coosa deposit, which is the largest, most advanced natural graphite deposit in the continental United States. We have 42,000 acres of mineral rights. And that's going to be really important, not only for us, but I think for the graphite industry as a whole. Because we've done some exploration at Coosa. We've drilled 234 drill holes to date. And we've found, more than 2 million tons of resource, which would be more than 20 years supply for our mine. But we've only drilled less than 10% of the acreage we have. So the good news is there's a whole lot of graphite at Coosa, and the United States is going to need it.
So what would be some of the things that are either extending the timeline for you of getting into production with the plant and the mine? And what are some of the things that you think that the government can do, or is there anything that the government can do to expedite this process, and not just for Westwater Resources, but for other resource companies that are looking to establish either mining operations or, more importantly, in my opinion, processing capacity? Because as I've said, no matter where it's mined in the world right now, it all gets shipped to China for processing.
Right. So in terms of exactly where we are, in terms of bringing our Kellyton plant online, we're a couple of years into construction. We're about 10 to 12 months away from completion of the construction and commissioning at Kellyton. And we need to continue to make, good progress on that, because we're fully sold out under offtake contracts to Stellantis, SK On, and we even have an offtake contract for our byproduct. And so we need to continue to move that along so we can meet the commitments we have under those offtake agreements. I don't really see that being a huge impediment for us, because we got started with our process of qualifying our material with our offtake customers and other potential customers more than 3 years ago. One of the things that investors often overlook is the fact that the qualification timeline for battery-grade graphite to go into lithium-ion batteries can be 2 to 3 years. And so we started that process, 3 years ago. We continue to ramp up our capability from our Kellyton plant. We've started producing off our qualification line, which has a capacity to produce more than 1 metric ton per day of anode material. And just last week, we shipped a 1.5 metric ton sample to one of our customers. So we continue to do that. And one of the differences I think we took as we went through this process is we didn't really start by doing things at the bench scale or lab scale. We started by running our samples in 5-ton batches. And I think that caught a lot of people by surprise. But from our perspective, that's how Dow Chemical would do it. And what we really wanted to do was we wanted to take that scale-up risk off the table. And our customers really liked that. And I think that was one of the critical reasons why we were able to get binding offtake agreements and others weren't, because of the approach we took to our process. And so, getting into that qualification timeline with the major battery manufacturers and OEMs around the world, I think is critical not only for us, but for others. And so, I think in terms of, where we're going to see this industry, going in North America, there's about more than 12 battery gigaplants currently under construction in North America. Kellyton through phase one at 12,500 metric tons, and then with phase two planned, take us up to 50,000 metric tons, is only going to supply a few of those plants. So the big question is, where's the rest of those battery manufacturers going to get the materials? Right now, with the duties in place and the anti-dumping duties, it's very expensive to import Chinese material. And so, we think there's lots of room for expansion. We think that there are other companies that, while they may be years behind us today, they will ultimately come online. And as a North American market, I think we need that. And I would say, the government, broadly speaking, has been, supportive. We never built our business plan on the expectation that we would need or require government funding to be successful. But, we are, actively in discussions with the government at various levels, whether it's at the DOE or the DOD. At Exim, we have an LOI and we have a loan application that is pending. And so, to the extent there's government support available, I think that's great. I think the government's trying to be supportive in terms of permitting reform. And I think as far as our Coosa mine is concerned, we certainly welcome that. And we are in active discussions with the Federal Permitting Council as they have their, Fast 41 process underway. We know others are, certainly taking advantage of that. I would say this is probably the best permitting environment that certainly, I've seen in decades. So that's very encouraging.
Great, Terrence, thank you for that overview. Really enjoyed learning more about your company and getting an update on your progress. And thank you for sharing the situation in the graphite market with us today.
Pleasure to be here. Thank you.
Great. Thank you, Terrence. Our next guest is Scott Monteith, Chief Executive Officer, and Lauren Crenshaw, Chief Financial Officer of Avalon Advanced Materials. It trades on the TSX under the ticker AVL and on the OTC under the ticker AVLNF. Avalon Advanced Materials is developing a rare earth elements and zirconium resource in Canada and is also looking to build a lithium hydroxide processing plant in Ontario, in addition to working on a number of other projects in the metal and mineral sector in North America. Scott and Lauren, please tell the audience a little bit about your backgrounds and what Avalon Advanced Materials is looking to accomplish, in particular with respect to the development of a non-Chinese resource of rare earth elements and lithium hydroxide processing capabilities.
Thank you, Shawn, and thank you to Water Tower Research for hosting us. I'm Scott Monteith, and I'm the CEO of Avalon Advanced Materials, joined by our new CFO, Lauren Crenshaw. A little bit about me. I was brought on to the Avalon team 2.5 years ago, and I was invited to run the business because of my background scaling up clean tech assets, including refineries, large water infrastructure treatment systems, and air technology systems that reduce carbon massively from refineries. So with that background, the board felt that I was well suited to scale up Avalon's resources. Avalon has been around since 1995. For 3 decades, the company has owned high quality critical mineral assets, but has not converted that potential into shareholder value. Today, our market cap is roughly $20 million CAD versus intrinsic values in the 3 to 5 billion CAD range, supported by feasibility studies. That gap is our opportunity. We've refreshed our board, reset the management team, established new partnerships, and now we're positioning Avalon to finally execute at a time when Canada and the United States urgently need to diversify away from China in both rare earths and lithium.
It's a pleasure to be here, Shawn, and thanks for inviting us. My career actually started on Wall Street. About 1/3 of my career is Wall Street, 2/3 is Main Street. Started off as an equity research analyst at Smith Barney, large cap value fund. Spent 5 years there before then spending 5 years with Prudential Capital doing private debt and mezzanine financing. So I sort of understood the equity and the debt components. And then I said, I don't want to chase deals. I'd like to be on the other side of the table with a management team actually driving value. And so ended up spending about a decade at Albemarle, progressing through several roles, ultimately becoming the CFO of the lithium division at a time where we were laying the foundation for a lot of what Albemarle has now become. And this is my third public company CFO role. First, joining Orion Engineered Carbons, large carbon black producer in Houston. Then most recently at Compass Minerals, which is a 200-year-old salt mining company that was endeavoring to extract lithium from the Great Salt Lake. But I'm thrilled to be here on this team with Scott and the other team members, and on this journey to close this gap between the market cap of our company and the intrinsic value of our assets.
That's a great introduction, Scott. Thank you very much for that. To follow up on that, can you provide a little bit of an overview for our audience about the markets that you're looking to participate in, particularly REEs and zirconium out of your mine, and eventually the processing plant for lithium hydroxide? Maybe talk about the structure of the market, who some of the top players are, where it's being mined, where it's being processed, and what the current environment looks like in terms of supply and demand, and outlook on any tailwinds or headwinds that may be coming.
Certainly. Avalon is not a single project explorer. We control a critical metals portfolio that spans rare earths and lithium with monetizable non-core assets. Nachalacho, which is our rare earths project in the Northwest Territories, Canada, is one of the largest world deposits of rare earths, containing both light and heavy rare earth critical minerals for permanent magnets in electric vehicles, wind turbines, and defense, along with zirconium, a strategic material for nuclear energy production, high-tech, and industrial applications. Nachalacho offers Canada and the US a credible non-Chinese alternative. Thunder Bay is where we are building our Lake Superior lithium refinery. It's located in Thunder Bay, Ontario, right on Lake Superior. It's a planned refinery, not a mine. It will process spodumene feedstock into battery-grade lithium hydroxide within Canada, anchoring a missing midstream link in the North American battery supply chain. The project benefits from exceptionally attractive infrastructure attributes and a technical partnership with Metso out of Finland. Separation Rapids is another joint venture project of Avalon's. It's a lithium pegmatite resource containing spodumene and petalite. Petalite is a unique material serving both glass and ceramics and battery markets, giving Avalon diversification. Sibelco, our joint venture partner, has a 60% stake in the project, and this reflects the strategic appeal and the value of this asset.
That's great, Scott. So you mentioned in your introduction of the company the importance of establishing a domestic, or at least a non-Chinese, Indonesian, DRC mining and processing ecosystem in critical elements. In your opinion, why do you think this is such an important topic? Obviously we've had national security concerns. Chinese have been flexing their muscles when it comes to their control of the REE market. But what do you think it will take, in your opinion, to set up a ecosystem, if you will, of not just mining, because it really doesn't matter these days where you mine these critical metals from, you're shipping them to China for processing anyway. So I think your lithium plant could really be sort of a model for other companies to follow. But can you expound a little bit on that topic and talk about how Avalon is working to mitigate this Chinese dominance in rare earths and lithium processing?
Certainly. It's bigger than economics. It's about national security and industrial resilience. Today, North America is vulnerable to supply chain disruptions because of its dependence on China for processing both lithium and rare earths. Without secure supply, EVs, wind turbines, electronics, and defense platforms are all at risk. What it will take: long-term policy commitment, not just one-off incentives, anchoring the value chain beyond mining into the midstream processing, supporting the refining, separation, and precursor materials, partnership between industry, governments, and strategic end users, which include OEMs and defense utilities. One key component of the rollout plan is for government to invest in these types of projects and to assist in setting fair market pricing for the industrial materials, including the lithium hydroxide. Up until today, we've been competing privately with Chinese set pricing parameters, which are, in our opinion, fictitious. They're artificially set by government intervention in the Chinese market, and we need Western governments to support Western private industry.
Makes a lot of sense, Scott. In your opinion, what do you think are some of the obstacles obviously we've started domesticating our supply chain. Certainly there have been a lot of executive orders coming out of the White House with this administration. But as you said, it needs to go beyond sort of temporary measures or tax incentives or things like that. So what are some of the obstacles that the industry thinks it's facing? Not just yourself, but other junior developers have had difficult time accessing capital. I've heard about regulations being a nightmare to navigate. I've heard some people bring up things like lack of skilled labor in North America. We've lost a lot of our mining and processing know-how, if you will. So if you're kind of looking at that basket, what do you think are the kind of the top one or two issues that the North American industry needs to figure out?
Oh, there's a bunch of them. The biggest obstacles that companies like Avalon faces these days is the whole streamlining of the mining industry concern. We need to streamline permitting so that mines can become operational within a reasonable amount of time, rather than 10 years, try to streamline it into 2 or 3 year increments. Financing needs to be provided and supported by not just retail investors and institutions, but by pension funds and government agencies. We need the full backing of our financial system to make a reality of this new Western ecosystem of critical minerals.
Makes sense, Scott. And then just final question, and you alluded to it in your earlier comments, but what can governments can do, whether it's a state level or federal level, to help enable the growth of this industry, or at least get out of the way?
Well, again, I believe providing financing into the capital stacks of these big scale projects, these large scale projects, is important. Governments acting as a lead, for example, will trigger a domino effect with private investment. With governments helping to set fair market pricing for the chemicals being produced, whether it's rare earth elements or lithium hydroxide, it again will that sort of guaranteed pricing format will help encourage private investment into these industries.
Okay, Scott, that's very helpful. Makes a lot of sense. Before I let you go, I want to ask you, you referenced at the top of your presentation about the disconnect between the net present value that your projects are representing and the market cap the stock is currently trading at. So what are some of the catalysts that investors may be looking for over the next, let's say, 6 to 12 months that will help unlock some of that value?
What will send a message to the investment community is for Avalon to actually raise money to build these projects, multi-billion-dollar refineries, mines, and the like. Once the capital starts to fall into the stack, we'll be able to execute on the plans, and that is, building out the mines and refineries.
Hi, Dmitry. One thing I'd like to add, and by the way, thank you once again for inviting us to be a part of this symposium, is that, as you know, I started my career as an equity analyst. And when I considered and researched Avalon, I took an investor point of view. And frankly, Avalon represents what I would call a deep value investment opportunity. And anytime you have a deep value situation, the question is, what are the catalysts to unlock that value? And I would tell you that there are 9 catalysts, 2 of which have already occurred. The management team being 80% new since Scott arrived is quite substantial in terms of a catalyst. The board being 60% new since Scott arrived is also an important catalyst. Leadership is what drives energy allocation, and energy allocation towards the right priorities is what drives value creation. And so when we wake up in the morning, beyond those two catalysts, there's 7 more that I want to lay out for you. One, what you should imagine is that our desire is to strengthen our balance sheet and eventually eliminate the overhang on our stock associated with the equity instrument that's on our balance sheet. We believe that there are more efficient sources of funds, and investors should imagine that that is an area that would be an area of focus. That's catalyst number 3. The fourth one would be around continued validation of the resources. That means refreshing the 2013 DFS on the rare earth asset and advancing the lithium PEA to a DFS as soon as we can raise the funding to do so. That's catalyst 4. Catalyst 5 would be securing longer term strategic funding. We are under no illusions that we can go this alone. And that's one of the things I love about Scott's mentality. I think he is thinking flexibly and thinking in terms of not going alone, but in terms of partnerships. And so you can imagine a wide range of potential partners who might have an interest both at the government level and the private sector level in assisting us in advancing and bringing to life both the rare earth asset as well as the lithium asset. That's catalyst number 5. The 6th catalyst would be something along the lines of non-core asset sales. We are blessed to have a number of assets that are very attractive, not all of which are in our core focus. And so, for example, you might imagine the cesium lily pad resource embedded in our separation rapids might be somewhat less core than rare earth and lithium. You might imagine our East Chemfield tin asset, our Warren Township asset, or all the kinds of assets that are very valuable, but not strategically core. And so that would be a 6th catalyst. 7th is the idea of executing on a supply agreement for spodumene with a partner. An 8th could be an offtake agreement with regard to our lithium hydroxide. And 9th are things like we're doing today. We have not regularly told our story. Almost like a presidential candidate, I think the recognition of our name in the marketplace amongst institutional investors and retail in the US and in Canada is not what it could be. And so it's opportunities like this that you should expect that we will continue to show up at to tell our story. But it's easy to tell a story. We ultimately have to execute. And that's what we wake up in the morning wanting to do in order to close this gap in terms of the market cap and the intrinsic value. So look forward to continuing the dialogue, and thanks again for having us.
Thank you, Lauren. That's a great summary, and I do appreciate the fact that refreshing the management team can, sometimes serve as a catalyst for stock revaluation when the sort of results start following the new appointment. So I wish you guys the best of luck in developing these assets. Certainly North America needs it, and I think Western and capitalist economies in general. So I appreciate your efforts on that front and wish you the best of luck.
Thank you very much.
Thank you.
Our next guest is Hugh Jackman, Chief Executive Officer of Northern Graphite, which trades on the TSX Venture under the ticker NGC and on the OTC under the ticker NGPHF. Northern Graphite is a natural graphite company developing graphite resources in Canada and working on established North American and European-based plants to upgrade flake graphite into battery anode materials. Hugh, please tell us, the audience, a little bit about your background and what NGC is trying to accomplish with respect to the development of a non-Chinese source of battery-grade graphite material in a natural graphite mine.
Yes, thank you for having me here. My name is Hugh Jackman, I'm the CEO of Northern Graphite. And, I spent the last 30 years of my life in specialty materials, ranging from composite materials to adhesives and carbon fiber, carbon powders. And the last 10 years really dedicated to graphite and graphite powders into battery and industrial materials. Northern Graphite is a company that has been around since actually 2002, so a long time, developing initially a project in Ontario called Bisset Creek, a graphite project in Ontario. And then in 2022, the company acquired two graphite mines that were in production or had been in production and were in care and maintenance. One of them was in Quebec and the other one in Namibia. And by acquiring these two assets, the company immediately became a producer of graphite, which really allowed us to then move much faster down the value chain to develop our own battery materials and go after the battery materials industry. Today, the company is just under 100 people. We have our three mining asset, plus we are developing a project in Baie-Comeau that would be basically taking graphite from Canada and Namibia and turning it into battery anode materials so that we can sell that into battery makers in North America. And then we have a second project in Europe, in France, of taking the material from Namibia and converting it into battery anode material for the European market. We also have our R&D and a technical center in Germany, which we acquired about over a year ago, just over a year ago from Ereus Battery Materials. That came along with quite a bit of technology, 40-odd patents around carbon materials for batteries. And so we rely very much on that center to help us develop our materials and our processes to service that industry.
Thank you, Hugh, for that overview. That was very helpful. This is Dmitry Silversteyn. I just wanted to build on that a little bit. Can you talk about the graphite market or the graphite industry in general? I know it's difficult to estimate sort of the size of the market given all the moving pieces, but perhaps you can talk about the structure of the market, who are the top players, where it's mined, where it's processed, as well as maybe touch on the current business environment and what are some of the drivers, especially with the anti-dumping tariffs being placed on Chinese graphite.
Yeah, that's a lot of questions. So let me start with the market. I mean, predominantly, graphite is used either in batteries, and that's probably the largest market today and will be much bigger than what it is because of the growth of the lithium-ion battery industry. In the battery market, graphite is basically 50% of the battery because it plays the role of the anode, which is where the lithium ion are stored when you charge the battery. And the graphite has this very unique characteristic. It is made up of 6 atoms of carbon in a specific shape that can hold 1 atom of lithium. And so basically that's the role of a graphite in the battery. Outside of a battery, graphite plays a role mainly as a conductor of heat and electricity that is super light because it's made of carbon. And so it replaces copper and other metals in applications where you need a higher level of conductivity and a lighter environment. That's one main area for industrial application. The other one is as a lubricant, because graphite is made of flakes and that these flakes are loosely connected together with what they call the van der Waals forces. When you actually move these flakes one against the other, they actually act like a lubricant. And so the best example of that is a pencil. A pencil is made of graphite. When you actually write on a piece of paper, you are actually basically exfoliating these graphite particles and putting them on the piece of paper. And what you leave behind is basically the exfoliation of the graphite through the pencil. So those are the two main markets, and within the industrial, broken down into those two categories. The industrial market until about 10 years ago was the majority of what was being sold, and that market today is about 300,000 tons a year. So the total market is quite large. Put it this way, about 300 million to 450 million in size, US dollars it is. If you're talking about the battery industry, so you need about 1 kilo of graphite for 1 kWh of battery. So it's pretty linear. So if you think about the battery market, when it all started, you had about 2 gigawatt of capacity around the world, and therefore, you needed about enough material to be able to supply those 2 gigawatt of power. So it was about in total, we would need about 2,000 tons of graphite to be able to supply that entire industry. But today, we're talking about 1 terawatt. And so 1 terawatt is more like 1 million tons. So the whole industry has gone from 2,000 tons to about 1 million tons. And therefore, that's by far the biggest opportunity for graphite moving forward. Now, most of that graphite today is made in China and processed in China. And actually, we are the only producing mine in North America. There are a couple of other producing mines in Africa and in Brazil, but in total, you can count them of fingers of both hands, or even one hand. And there are quite a few projects in development, but none of these are really into production yet, and they need quite a significant amount of capital, as well as quite a long timeline in terms of getting the permits to be able to get into production. So that's where we stand today.
Thank you. That was a very detailed answer, and I appreciate the information that you provided there. To build on that, you mentioned that most of actually, I think it's close to 90% of the graphite is being produced, or at least upgraded into graphite material usable for batteries in China. So can you talk about sort of the importance of establishing a non-Chinese, preferably a North American or Western European ecosystem, if you will, for critical metal production, excuse me, to support the world's transition to basically, electrically driven economy versus fossil driven economy? And what are some of the what's the impetus for establishing a non-Chinese supply chain, and what do you think some of the challenges are in doing so, either in North America or in Europe?
Yeah, I mean, it's quite interesting question because, with the current geopolitics, it's pretty obvious that the dominance of China on processed materials, in particular graphite for batteries, is really not a viable option for the long term. Because at any point in time, China can turn around and basically stop the rest of the world producing batteries. And so, the sense of urgency and the let's say the security aspect connected with that is really quite sensitive at the moment, and I would say extremely timely. So but there are a lot of barriers in order to make that happen. I mean, first of all, most of the technology of processing critical materials is now in China, because none of the other countries really have invested a lot in processing those materials. So if we want to process graphite in Canada and use it into a battery, we are quite dependent upon technology that is sitting in China today, and at least equipment that is sitting in China today because nobody else is actually processing those materials outside of China. Second, we don't have a lot of people who have the knowledge on how to operate and basically use the equipment to produce the materials that we need. Thirdly, it's quite CapEx intensive, so we need to invest quite a lot of dollars into producing those materials. And then last but not least, we need the raw material so that we can actually process it into what the battery will require. And the mines that we have outside of China are usually quite small because they're used to servicing the industrial markets, which are much smaller. And the characteristic of the flakes that you use in the industrial market is quite different from the one that you use in the batteries. Usually they are larger and they serve a different purpose. As I said at the beginning of the conversation, in the industrial market, you're looking for conductivity and you're looking for lubricants, whereas in the battery, you're looking for crystallinity, that famous hexagonal crystal made up of these 5 or 6 carbon of atom that hold one lithium atom inside them. So it's quite different how you obtain that material. And so even if you were producing in North America like we were, a lot of graphite for industrial application, it doesn't necessarily mean that you can use that graphite into batteries. In our case, it is, but it's not always the case. And so, we have to spend a lot more time to basically find some more deposits, and we have to, identify and bring the technology from China over to our world, and we have to hire people that have experience in using these materials, and we have to raise the money to be able to deploy the CapEx. It's quite significant in the space.
Understood. And certainly, when people talk about the money, the capital that will be required to set something like this up, not just for graphite, but for other metals as well, and elements. I mean, we're talking about, in many cases, hundreds of billions of dollars if you look at, kind of maybe even $1 trillion if you look at all-in costs of developing mines and plants to set up this infrastructure that's somewhat independent of China. Last question I'd like you to address is, you mentioned a lot of things that are needed from people to resources in terms of mines to capital. What role do you think the government can or should play, and I'm talking about Western governments, obviously, whether at the state or federal level, to help facilitate the creation of a non-Chinese metal processing industry? What do you think the companies or the governments are doing right now? And what do you think they can do more of to help you and other companies looking to decouple from Chinese supply chain to actually establish an alternative?
Well, I mean, I think, there's a bunch of things they can do. Some of them they're already doing, some of them they need to do more of, and some of them they need to start doing. I think, we need infrastructure. We need mines to be developed quickly, so we have to streamline the whole permitting process around both mining and processing facilities that need to be installed. I think, the graphite industry in particular, has been very aggressive in terms of how they've subsidized the industry in China and how the producers have been basically selling their material below cost in order to dominate the industry and prevent nascent industries like ours to come about. So government need to take action on that and protect this nascent industry through the use of duties and tariffs like the ones that have been announced in the US, at least from a provisional point of view. And then they have to put in place mechanism that would incentivize the battery makers to choose materials that are made in the Western world and in North America rather than materials from China, even though those materials may be more expensive, because they're not as subsidized or they're not being sold below cost. And in order to do that, there are different mechanisms that they can come into play. It's like, for example, offering a floor for the material so that we, the producers, can attract investment and provide adequate return to those investors, so that in combination with what the government can do, can help us, build this capacity. And then last but not least, we've just benefited from support from the federal government in Canada to extend our pit in Lac de Zio, which had been producing for 30 odd years and was coming to an end of life. The government actually stepped in and provided us with capex or the capital to be able to do that. So I think that's really important as well, as for the government to find ways to extend existing operations and not just look for developing new ones, because these existing operations can actually immediately supply the market.
Understood, Hugh. Thank you very much. That was a very good answer and very detailed answer. I appreciate the candor. This is all the questions I had for you today, Hugh. Thank you very much for joining us. This has been very informative, and we look forward to hearing from you more in terms of the progress that Northern Graphite is developing. It sounds like a very necessary and important piece of the infrastructure in North America if we want to be battery independent. And I wish you luck in getting your projects developed. Thank you very much.
Thank you, Dmitry.
Next up is Odyssey Marine Exploration, ticker OMEX, trades on the NASDAQ. And our guest today that we'll have is Mark Gordon. And Mark, I'll turn it over to you to give a little background about yourself and a quick overview of the company. And then Dmitry will jump in and run through some questions with you.
Okay. Hey, thank you, Shawn. It's great to be with you guys again. So yeah, Mark Gordon, Chairman and CEO of Odyssey Marine Exploration. I've been with Odyssey 21 years now, after having been recruited to come to Florida to join the company by the company's founder, Greg Stem. Lots changed in that time, but Odyssey's been engaged in deep ocean exploration for over 30 years now, doing really complex projects in the deep ocean. First 15 years focused on recovering valuable cargo from historic shipwrecks lost in the deep ocean beyond 1,000-foot water depth. Our most recent shipwreck project was in almost 18,000 feet of water. And that prepared us really well for the pivot that we executed 15 years ago to get into the seafloor minerals business, because we're using the same team, tools, and technology to work in the deep ocean, but in this case, to find, quantify, and then ultimately recover valuable minerals from the seafloor.
And if I understand correctly, Mark, Odyssey Marine has ownership positions in a number of with a number of companies that are actively engaged in actually quantifying some of this deep sea marine deposits, specifically off the Cook Islands. But you also have a project in off the Gulf of Mexico, or off the coast of Mexico, in phosphates, if I remember correctly. So can you just give our audience a quick overview, maybe, of the markets that you are focusing on? Specifically, we talked about cobalt and I mentioned phosphate. Just talk about what's going on in the industries currently, why it's such a hot topic currently, and will probably be for the next several years, and give people some kind of a, maybe an overview on what the industry structure is.
Yeah. Yes, that's right, Dmitry. We're focused on several different mineral sets, not just one. Our strategy is to balance the different needs of mankind. So we're looking at phosphates for food security. It's a primary ingredient of fertilizer. And then we're also looking at the future focused demand for things like electrification, AI, and battery metals, which is where the polymetallic nodules come in. One thing that's unique, I think, about our approach is we're looking at not only different mineral sets, which gives us diversification across commodity risk, but also different geopolitical settings, because these projects are located under the domain of different governments. The high-grade phosphate deposit we're pursuing is off Mexico's Pacific coast. I mentioned it, but it's primarily used in fertilizer, although there's an emerging potential use as phosphate and battery formulation, so that we might have two ways to win on that one. And that's a project that Odyssey has developed since the beginning, and we still own a substantial equity stake in that one individual project. The Cook Island projects you've mentioned, we have stakes in two companies. They're minority stakes in two out of the three license holders. Here, the nodules are cobalt rich in that part of the Pacific. So very much needed in battery metal and for defense formulations. But there's also a tremendous amount of copper. And when I mentioned AI earlier, all these giant data centers that are being built are going to consume a tremendous amount of copper. So there's a lot of different usable metals inside those nodules that we'll bring to market.
Certainly makes sense. Mark, can you sort of bifurcate the two comments that you made? One about the needs of the market and why these elements are in such particular demand, what are some of the drivers are, and how the industry is currently structured that seems to provide a disincentive for developed countries to get into this market and continue to sort of outsource the refining of the metals and the processing of the metals to China and to Indonesia and to third world countries in general. How does that impact both the security that you mentioned, whether it's food security or our ability to continue to electrify our economy? And how important is it, or why is it important, I should say, I guess, to establish a domestic, or at least a non-Chinese, non-Indonesian, non-DRC focused ecosystem of critical metals?
Yeah. So you had a bunch of great questions wrapped into that question there, Dmitry. So I'll start and then redirect me if I'm not hitting some of them that you want me to touch on. Well, first of all, if I start at the highest level, minerals are mined, a lot of minerals are mined around the world. The key issue is a lot of the processing for some of the critical minerals, especially cobalt and manganese, is occurring in China. And so the obvious, there's I think a national security threat and an economic threat anytime a country is reliant on an adversary as part of critical part of their supply chain. So I think what the U.S. is starting to do and really needs to do is build the production and processing capability either in the U.S. or in trusted allied nations. Same for the mine supply. You really need the minerals to be coming. Now, candidly, there's only so many we're going to get in the U.S., but we need to grow that, no doubt. But we need to rely on allied nations. So perfect example, the two projects we're working on, although there have been some trying moments recently, Mexico is certainly an ally. It's a close neighbor, a source of supply in the Americas that will ensure food security. It's huge. Similarly, the project in the Cook Islands, just less than a month ago now, David Copley, the main advisor to Trump on critical minerals, flew to the Cook Islands. That's not an easy trip to make. So there was real commitment there from the White House sending him there, and they signed an agreement. So good news, Odyssey is invested in 2 out of the 3 license holders in the Cook Islands, and those are critical minerals. And then I'm going to riff a little bit, so reel me in if you want me to, but I'm very encouraged with the recent MP material deal as an example, because here the U.S. government is getting behind a U.S. mine and processor in a big way. Price guarantees, offtake agreements, $400 million equity investment by DOD, and all of that, package sets up investors to be willing then to loan the money that are going to be required to build more processing facilities in the US. So if I try to circle back on everything I touched on, I think that there's huge vulnerability right now for the US in that both mining and processing capability is for the most part not here. A lot of the processing capability for some of these critical minerals we've touched on a couple of times now are controlled by China, which is problematic, right? If for both national security as well as our economy. So the more the government can do now to help incent not just the innovators like Odyssey, but also the investors who have to support these projects, the better it's going to be on all accounts. And the good news is we're starting to see that momentum. One last thing I'll say, before joining Odyssey, I spent 27 years of my adult life in Washington, D.C. I have never seen more commitment and activity focused on fixing this problem than I'm seeing out of the current administration. So while there are issues there, I don't want to sound like an alarmist, because I think solutions are starting to come, and they're coming as evidenced in the form of the MP deal.
That certainly makes a lot of sense, Mark, and you did touch on a lot of things that I wanted to discuss here. I want to dive a little bit deeper. You mentioned that there's lack of U.S. capacity, both in terms of mining and in terms of processing. When it comes to, China is not a mining hub, right? I mean, it has rare earths, but that's really the only material that I can think of, critical element that I can think of, where they dominate the supply side of it. But where they do dominate is on the processing side. So, wherever you get the metal from, whether it's from Argentina or Brazil or Democratic Republic of the Congo, at the end of the day, it all gets shipped to China for processing. So
Correct.
when you think about kind of standing up the domestic supply chain, besides capital, and certainly capital is a big part of it, but what other obstacles or impediments do you see to U.S. basically, U.S. and Canada and Western Europe replicating what China has done in terms of processing infrastructure, where you can then import metals from wherever it's mined?
Yeah. So I think other than capital, right, it relies on regulatory clarity, right, for how mining will take place wherever that is, but also for processing and the necessary infrastructure required, because it's not going to be just about the plants, it's going to be about the infrastructure that bring raw material to the plants. So seeing individual companies can't do that. That's going to require federal and state government support. That's critical. I think that there's a labor issue for sure. Being able to find the right talent to man those operations in the U.S. Because our economy has moved away from being a manufacturing and processing economy for a lot of years, and now we need to sort of bring that back into play. So that is going to be, talent is definitely going to be an issue, because we haven't had the requirement for the type of talent you're going to need for the processing. And then, I think impediment. So we were talking about what's going to support that change. The other thing that we need to overcome is, there's a lot of, NGO resistance that's creating barriers right now and slowing things down, including the commitment of government to support, not only the capital, the infrastructure, the talent, but generally support mining and processing in the United States. And so that's an undercurrent that needs to be countered. Now, you would think you could do that with really good science, proving to them that, look, whether it's mining or processing, it can be done in a way that you can mitigate the environmental impacts. But regardless of how much science you put in front of some of these groups, their ideology just won't permit them to see the science for what it is. So, and that's kind of an undercurrent.
Yeah, and that makes sense, and that's unfortunate. And we've seen that a lot. There's two kinds of NGOs that I look at. There's NGOs that are really concerned about the environment and making sure things are done right, and there are NGOs what I would call Luddites, who just don't want progress. They basically, they're focused on a net zero or some other arbitrary goal, and they'll do whatever it takes to make sure that we move in that direction, and that's tough to overcome.
Yeah, you know what, Dmitry, and I guess I was referring to the latter of those groups, because there's a bunch of great NGOs out there, and we need them to do what they're doing. So I don't want to make that a blanket statement. In fact, I serve on the board of Marine Applied Research and Exploration, which is a nonprofit NGO focused on environmental monitoring, fishing protections, and monitoring for other environmental impacts. So Odyssey is all in on making sure you got to be sensitive to what's going on, and you can't whitewash something. But on the other hand, if you have good science that proves you've come up with appropriate mitigations, we shouldn't delay progress.
Absolutely. One last thing I want to touch on, and you actually touched on that in your answer, is the government's role in this. Obviously, we're a Western economy, we're a capitalist society, we're not a command and control economy, so government has by definition, a limited role in the economy. But what can practically federal, state, local governments do in the U.S. and Canada and Australia, in Japan? Obviously, you're most experienced with the U.S. regulators, but what can government's role be besides funding in making sure that this ecosystem is created and some of these not just economic but real geopolitical and national security concerns are addressed?
Yeah, so I think on that count, look, first and foremost, streamline regulations and permitting, make it really clear, what bars you have to clear and what timeframes are associated with that, and keep that consistent. That'll encourage innovators like ourselves, like the metals company and others, to make the investments and take on the change that's going to be necessary. The direct investment model is really interesting. I hadn't contemplated it before the MP deal, but the idea of making capital available, because these are early stage, like these projects in Mexico and in the Cook Islands are early stage projects, and having some government support would incent further investor support. So direct investment. Related grants and loans and offtake agreements, right? Some of the processing capability, at least in seafloor mineral, the mining ships are going to be hundreds of millions of dollars in CapEx. The processing is going to be potentially billions. And so supporting that with a combination of loans and grants, and then also supporting the companies, like in the MP deal, with price guarantees for the commodities, as well as offtake agreements where the government is actually going to buy for domestic stockpile. That would be huge. And then I guess finally, certainly things like tax credits to help incent the building of these facilities, the infrastructure support I mentioned earlier, railway, electrification, port facilities. I think those are all things that the government can do. But first and foremost, it's got to be, let's get regulatory process streamlined and well understood, so people are willing to take the risks that Odyssey and others are taking here.
Great, Mark. That was actually a very good answer and a very good summary of the challenges and the opportunities that lie in front of us. Just to end the conversation, can you talk a little bit specifically about what Odyssey Marine value proposition is, both in terms of the company and the role that it intends to play in helping the world decouple from China as a bottleneck for critical materials?
So Odyssey's role in helping the world with minerals, but specifically the U.S., which is where we're based, one of the only U.S. Publicly traded companies to be engaged in seafloor minerals to support the needs of our country and our allies. We're advancing multiple projects across multiple mineral sets, but as importantly, in multiple allied jurisdictions. So Odyssey is helping build a bridge for the U.S. for their critical mineral needs by working in places like Mexico and with allies like the Cook Islands. So we think we bring value back to the United States that way. And here again, we're leveraging our 30 years of experience, not only 30 years of experience working in the deep ocean, but 30 years of experience working with government and other agencies in developing complicated projects in the ocean. So we think that Odyssey is really helping to bridge the U.S. Critical mineral needs by leveraging our past history as well as our current portfolio of these projects.
Great. Thank you, Mark. Shawn, I'll turn the podcast over to you for some closing remarks.
Great. Thanks, Dmitry. Thanks, Mark, for joining us today. And we'll wrap it up today. And thanks again for participating.
Thank you, Shawn. It was great being with you. And thank you, Dmitry. Always a pleasure.
So that will wrap it up for the first installment of our WTR Symposium series, Critical Elements Mining and Processing Infrastructure Build-Out, a Matter of National Security. I'd like to thank the management from today's participating companies, including the Metals Company, Westwater Resources, Avalon Advanced Materials, Northern Graphite, and Odyssey Marine Exploration. I'd like to also thank my equity research colleague, Dmitry Silversteyn, for co-hosting this symposium, and a special thanks to the producer and editor of this symposium podcast, my WTR colleague, Joe Brunetto. Thanks everyone for listening, and don't forget to subscribe, as well as visiting www.watertower.research, where you can stay up to speed on all of our small cap written research reports, podcasts, fireside chats, and conference schedules. We'll see you next time for another Symposium Series podcast in part 2 of this one. Thanks everybody for joining us today.